Hi, in this episode of Mentoring Mondays, we're going to go over entry points. Now, entry points are not as important as exits, however, they do have their own relevance. You don't want to get into a trade too early, or you don't want to get into a trade too late. The problem with getting in too early is that you may not have waited for confirmation that there is a trade in play. So I'm a trend trader and I want to see confirmation that we have a trend in play. If I get in too early, I run the risk of actually getting stopped out early as well. So I want to let the trend run on for a little bit before looking to take a trade. And the problem with getting in too late is that you might have already missed the trade. Traders would have already profited from that trade. So you want to make sure that you haven't missed the main bulk of a trade. If you have missed the main bulk, don't force the trade and look somewhere else. There will always be a trading opportunity somewhere. So be patient and make sure you look for the right entry point. Another point I would like to make about entry points is that you shouldn't just enter one position. A lot of traders out there, they just enter one position in a good trade. Let's suppose you had a stock that you was investing in and that stock went on to trend for quite some while. You made, let's say, £1,000. Now, if you had entered one position, you made £1,000. But if you had entered, let's say, 3 more positions, you could have quadrupled that profit. So you want to make sure in your trading plan, it states that you can actually enter more than one position, because that's how you actually maximize your full potential as a trader. Now, the best entries I take are breakouts, because breakouts confirm movement in your direction of the market. So if I'm going long, if I'm trying to buy a stock and it's breaking out, which means it's breaking above a previous high level, it confirms to me that the price is likely to go even higher. So some people actually feel that if you're taking a breakout, you're actually buying it too high. But the key thing about trading is to buy high and sell higher. If you're buying high, it gives you extra confirmation that price is going to go higher. If you're trying to buy low, you don't really know whether price will go higher. It might continue even lower. So wait for breakouts, because breakouts are ideal for any market situation. Another entry technique is taking pullbacks. Now, pullbacks happen when price is moving up and then it pulls back to a support level and continues higher. Or let's say price is moving down, it comes up to a resistance level and continues lower. So pullbacks are a good way of trading because it allows you to get in a lot cheaper than you would with a breakout. However, you can't guarantee that with a pullback, let's say price is moving up, then it pulls back, you can't really guarantee that price will go even higher. It might come down to support level and look like it's stabilizing, but then continue lower. So breakouts are ideal. They work in any market situation, but pullbacks are good in a sense because it allows you to get in a lot cheaper price and it could potentially go in your direction. Now, whichever method you decide to take, either a breakout entry or a pullback entry, it's important to stick with one of them when you're first starting out trading, because trying to mix the two together can become quite complicated. So it's important that you stick with one and stick with it for a long term. And then once you become consistent and profitable, then you can look to start taking both entries. So if you're a breakout trader, take breakouts only. If you're a pullback trader, take pullbacks only. Another key thing I'd like to point out is that when you see your entry signal, when your trading plan states that you have to enter a trade, make sure you enter a trade. There's no point picking and choosing because you're never going to know which one is going to make you money, which one's going to lose you money. A trade doesn't tell you that it's going to lose money or make money. You just have to take every single opportunity. Now, I've found that when I feel like a trade is going to go in my direction and I take the entry, it might not do that. And when I feel like a trade is unlikely to go in my direction, but I still take it anyway, those are the trades that normally go in my direction. So you can never really tell which ones are going to be successful and which ones are not. So take every single signal and over time you will be profitable. Hit the subscribe button below and have full access to all my trading videos as soon as they are available.